Hey, what's up, guys? How are you doing? So, Treasury Bills. There has been an oversubscription of Treasury Bills lately in Kenya. And I was asking myself yesterday, why is there so much subscription for Treasury Bills? At a time when the real return on Treasury Bills is actually like 6%, 5% sometimes, the real return. When you talk about the real return, it means what you actually get, right? Of course, Kasongo will have to take his money, obviously. And once Kasongo takes his money or his cut from your returns on Treasury Bills, then in real sense, you're only making, let's say, 6%. So my question was, why is there oversubscription of Treasury Bills in the last few weeks? So I've been doing some research, just looking at Treasury Bills, looking at reasons why this could be happening right now. Now, those of you who don't know Treasury Bills, remember I speak about this all the time. I speak about debt securities, I speak about Treasury bonds, I speak about money market funds, I speak about stocks, I speak about real estate, I speak about every single thing in terms of investing, saving money. So stay here, click that like button, subscribe, and then you will get to know what Treasury Bills are, so that when I'm talking about them off the cuff like now, then you know exactly what we're referring to. So just like bonds, Treasury Bills are basically debt securities. So the government is basically asking you for money, you pay them, you give them that money, they take the money for a period of time, they fix it up for a period of time, and then they pay you with interest. Treasury bills are very simple to invest in, very easy. They're some of the most secure investments you could have because the government has never defaulted. At least our government hasn't defaulted in paying their debt, domestic debt in this case. And they are very secure in that sense. So the government is, it's a very secure place because you are always paying taxes. So the government is always generating money, and they can print money if they want to, guys. They can print money. They're also short term. So the other reason why most people could actually be running to Treasury bills as we speak is because of the short term nature of it. Most people right now might not want to fix their money long term because remember, interest rates have come down. I did a video on that already. The interest rates came down quite the interest rates came down quite a bit in the last few, I would say, few months or weeks or so. And therefore, people are not willing to get into treasury bonds as such because the bonds that were giving us 17, 18% are now back to almost 14% as such. Now, most people might not want to fix their money long term because if you're looking at, let's say, fixing your money for 10 years at 14%, or let's say 20 years for at 14%, you're thinking, why do I need to fix my money for so long? While something could happen and the interest rates could go high again. So one reason why most people could actually be rushing into treasury bills is because of that time period. Treasury bills gives you that advantage of just a few months. We have the 91-day treasury bills, we have the 182-day treasury bills, then we have the 1-year treasury bills, which is 365 days. So it gives you a period of time to fix your money and some interest while you wait for, let's say, long-term, horizon to see what the economic conditions are going to be, and if you can then put that money into other investments that are more long-term. But you don't want to be fixing your money at a low interest rate. Then after, let's say, a month or two, we are back at, let's say, 17%, and you are stuck with your 14% for 10, 20 years. So most people are now rushing into treasury bills, short-term investments. And that's a very good thing, right? People are thinking about their investment. They're thinking through the investment before they make it. They're not just buying it for the sake of buying it. They're investing with a plan. They are being strategic about it. And so that could actually explain why treasury bills have been oversubscribed in the last few, I would say, weeks or so. So basically that time period could be an attractive bit of this right now, especially when the economic conditions are not as stable as we want them to be. You want to have your money somewhere earning you money, but you also want to know that within a short period of time, you are back with your lump sum, you are back with your liquid money. You want to hold on to it a bit and see what's happening. Everything is now crazy, economically speaking, worldwide, not just in Kenya. But of course, in Kenya, this is an interest rate thing. The other thing about treasury bills is usually they have attractive rates. Right now, I can't even say they have that attractive rates because they are like 8%. We're talking about, let's look at this. Right now, we're talking about 91-day being at 8%, and the other 182-day being at 9%, and 364 being at 10%. I don't see any reason why this should be attractive in any way, especially owing to the fact that we've had really good interest rates. And the real return here, we're looking at, let's say, even up to 6%, the real return on these treasury bills. I wouldn't say that being attractive is one of the factors right now. I think most people are just so careful to get into the market. They don't want to fix their money long term. They don't want to be caught in a place whereby they have their money fixed at a very low interest rate and there's nothing they can do about it, or they try to sell in the secondary market and then they sell at a loss. So people are being careful with their investment. That's my opinion. The other thing about treasury bills that could actually make them attractive for people right now is that they're auctioned all the time. They're auctioned weekly. So every single week you have an opportunity to buy more treasury bills. So even if you wanted to layer them, if you wanted to have as many as possible, if you wanted to divide your money in between different bills, if you wanted to receive your payback in different periods of time, you can easily do that because every single week there's a sale. So depending on how you want to approach it strategically, it's easy for you to buy more. Depending on how you want to do it, it becomes much easier when they're auctioned all the time. So the other reason why we could be looking at this kind of oversubscription is because people have access to treasury bills. Maybe more people are becoming aware, maybe more people are becoming interested in treasury bills, or more people are becoming interested in investing. And most new people who want to invest will not necessarily go into long-term investment like bonds, like 10, 20 years. They would want something that is short-term, 3 months, 6 months, 1 year, maximum. That's what they want. So again, that could explain why most people are going to treasury bills. So let's look at one of the treasury bills that's just been offered, and let's look at the subscription rates, let's look at the interest rates, let's look at what you're actually making, and that could help us, see what's happening. Maybe you want to invest in treasury bills right now. This could be a good place to be if you don't want to put your money long term. And let's look at how the interest rate market is going to be in the next few months. So this could be a good place for you, especially if you are new to investing. You don't want to go into stocks, you don't want to go into bonds. This could be a very good place for you to start investing right now. So let's look at one of them being offered, and let's look at the conditions. Let's see if it's something you're interested in. So if we're looking at this, for instance, this is one of the treasury bills on offer. So if you wanted to check which ones are on offer, you just come to here, invest, come to securities, go to treasury bills, and then you have your treasury bills here. Yeah, it gives you all the information on how to invest, where to invest, when to invest. And then if you want to look at the ones on offer, you come down here and you press ones on offer. As you can see, we have this was 24th, this 20th March as well, 20th March as well for the auction dates. If you want to open any of them, you come down here. You can have the 91-day results, the 182-day result, the 364-day results as well. So let's open this. I already have one here that is just the 91-day one. So of course, the results of 91-day, 182, and 364, you will find them in here as well. This is the issue number we see here. This is on the 17th of March 2025 as we speak. So the tenure for this, of course, is 91, 182, 364 days. That's just the ISN number. So what we want to look at is the due date is like, this is for 91 days, of course, it's going to be like around 16th of June. And then for 182 days, it's going to be 15th of September and then 16th of March next year for the 1 year one. Now look at the subscription, right? So the 91-day one was oversubscribed by 88%. So the performance rate was 188%, meaning there was proper oversubscription. I don't know why people are running to them. It could be the reasons I've mentioned, and could be many more reasons, obviously. Investing is quite sentimental. People invest with their emotions. They look at the economy, they look at politics, they look at how things are going. They're either strongly feeling that the economy is doing well, or they strongly feel that it's not. So it's usually just a swing in between. We feel the economy is good, we feel the economy isn't good. We want to see how it's going. We want to play the safe game. So most people will be playing the safe game right now. 182-day one, the subscription was just under 100%, so not so bad. And then the 1 year one had 84% oversubscription as well. Crazy, right? Let's look at the performance. So as we can see, my market weighted average interest rate was 8.9% for the 91-day one. For the 182 days one, it was 9.1%, and for the 1 year one, it was 10.4%. So price per 100 at average interest rate would be like 97. That's the discounted rate, 97, 95, and 90. Now let's look at the table down here. The table down here gives you everything basically. It tells you the comparative average interest rates of accepted bids and gives you what was accepted before that. Okay. So 91-day, this particular auction that we're looking at was at 8.9%, like you've just seen. Last auction, this was at 8.9%. So that hasn't really moved much because the last auction was just a week ago or so. So it doesn't really move much with a variance of 0.0%. That's fine. 182-day one, as at now, we are talking 9.1%, and we were at 9.1% last week as well. 364-day one, we are at 10.4%, where we were last week, 10.4% as well. So there hasn't been any change really with treasury bills. But we're talking about 8% right now is crazy because most of the time, for the 91-day treasury bill, the last few months we were talking about over 10%, 11% or so, and then for the 1 year one we were talking about up to 14%. So this is a proper, a proper beat down, to be honest. But yeah, that's the treasury bill that's currently on offer. You can look at the other one as well for the 182, which I think is just the same as well. It's the same one. So each of them will just give you a breakdown of all the days involved, right? So it's the same one exactly. So really, that's what I wanted to just show you. Like, if this is something you're thinking about, then you might want to think about treasury bills for now. There could be a reason why people are rushing into them, but also that's not a very good reason to invest, right? You want to invest because you want to invest. But it's a good place to start if you're a new investor. It's a good place to start, especially now that stocks are crazy, bonds are long-term with low interest, and money market funds have fluctuating interest rates. So again, the other reason why most people could actually be going into this is because of the volatility in money market funds rates. Today there are 16%, then 14%, then 9%. They can give you whatever they want on any day. So there's no like very clear structure or determining factor of like, hey, at the end of the year, I'm going to have this much as my return, because that would then depend on the economic conditions. And because it's free for you to withdraw that money anytime, they make it as, as easy and as flexible as possible. And it's not fixed. It might be something. So treasury bill could be like a way out of that, because you know that for 3 months, I'm locked in at 10%. For 6 months, I'm locked in at this percentage. For 1 year, I'm locked in at this percentage. It makes your work much easier. So let me know in the comment section below, what are you doing about treasury bills, the shocking rates, and why people are running to them. I do not know. Let me know what you think in the comment section below.